Hello everyone, welcome to the Trend Investor channel. So in today's video, we're going to look at a very important concept that I love to my heart, and it is trend following. Trend following is actually one of the most rewarding, strategies, or one of the most rewarding style in trading style in markets. Some of the greatest traders have made money by trend following and by making huge profits when you are actually right. Okay, so that's what we're going to look at today. And before that, if you're new to my channel, like this strategy, there are a lot of other things that I discuss, and I also post swing trades every week. I also post ideas for investments, undervalued stocks. Recently, I posted HDFC Life and HDFC AMC, and this week, Sunday, also I posted 4 stocks for swing trading. So if you are here to learn and to earn money by investing or trading, don't forget to subscribe to my channel and don't forget to like this video as well. So let's jump into this video. We're going to take the example, from one of the posts that I posted on Twitter, which went really, had an amazing reach. So we're going to take that as an example, and I'm going to look at, how we do trend following. So in case you haven't followed me on Twitter, do follow me. So here I do have a pin tweet which has a lot of information, and the pin tweet is an Excel sheet, and it has some strategies related for positional trading, Nifty, Bank Nifty, stock trading, and strategies from some Twitter guys who have posted strategies. I try to code them on PineScript, and I've added them here. And also have some reference materials here which will help you try to figure out your own strategies which might suit your style, like for example turtle rules. A lot of system trading ideas here in this, and a lot of other threads which might be helpful for you. So we're going to take one of this posts that I posted back in 2020, and I'm going to show you how trend following can be done. Okay, so let's take a look at this, and we're going to look at 4 important points. One is how to take entries, how to pyramid your stock, how to pyramid your onto your winning positions, how to trail your stop loss, how to finally exit, and how you should be taking trades in these stocks. Okay, so let's start off with first. In this stock here, I'm going to first discuss about entries. Okay, now if you want to really catch big trends, or if you want to really catch massive gains in a stock, in just one stock, then you need to have a certain set of rules. Now the first rule that we're going to talk about today is large bases. So if you want to really catch big trends, catch stocks that are coming out of large bases. For example, in this example, I'm looking at granules here, and from May to almost October, that was almost 5 to 6 months of consolidation, and you need to look at a minimum 2 to 3 months of consolidation breakouts, or stocks which are coming out of probably more than 3 months of consolidation. So once you see such a consolidation, try to focus on the breakout point, for example, or a reversal point. Now there could be hundreds of scanners that but I do have my scanners based on CCI. So if you see CCI, actually here was the first breakout. CCI, this stock came in this kind of around this time, around September 2020, and that's when the stock is also coming out of a big base. So at that point, you want to add it to your watch list, and you want to take an entry at a predefined level. Now, for example, for me, this stock would be above that recent high. There, I would take an entry above that point with a GTT order, and I will be risking around 0.5% to 1% of my capital. Now, what do you mean by that? Now, this is the risk that you're affording to take in this trade. Now, for example, let's say you have 1 lakh capital, then the risk that you'd be affording in this trade should be around 1%, which is 1,000 rupees. So in case your stop loss hits, which is here, initial stop loss, in case the stop loss hits, then you'd be losing around 1,000 rupees of your capital, or 500 rupees of your capital if you have a total of 1 lakh capital. So you try to find how many shares you buy. For example, here, if let's say your entry is around 100, your stop loss is 90. So what you do is you take 1,000, you divide it by 10, and that's the number of shares you can buy. And then you don't buy anything until the stock consolidates again for a minimum 3 to 5 days. So after you take your first entry, let the stock consolidate for a minimum of 3 to 5 days, and the stock should retrace at least 32.8% of the Fibonacci level, right? So from this point to this point, so the stock has moved from here to here, that's a swing. So that's what we call a swing, and the stock should have retraced 38.2%, or the stock should have corrected, and the stock should have corrected for a minimum 3 to 5 days. Now both the rules have been satisfied, and then once the stock goes to that point and you see reversal, try to keep a GTT at this point and risk another 1% of your capital. So previously risked 1,000 rupees, now you'll be adding another 1,000 rupees, and you'll be risking in buying shares equal to that risk here at this point. So that would be your first pyramiding entry, or you add more to your existing positions. and then you trail your stop loss to the swing low. So from here, the stop loss now comes here, which means now you'd be having around 1.5% of your overall capital as risk, which is totally fine, because at this point you're confirming that your trend, your stock is acting how you want it to act, and the stock is actually heading higher. Now that's very, very important in trading, right? So you do not want to add too much of positions in the first position unless you see the stock is going in your way. And that's how big traders trade, and that's how most of the books, technical analysis books, be it William O'Neill, be it Mark Minery, that's how they trade and that's how they make money. So now after the first entry here, second entry here, again let the stock consolidate for a minimum 3 to 5%, and then let the stock retrace up to the 8.2% Fibonacci level. So from this swing to this swing, the stock should have retraced 30 to 38.2%, and also the stock should have consolidated a minimum of 3 to 5 days. Now at this point, you see the stock has consolidated for 3 to 5 days. It has also retraced a good 38.2%. And now you see at this point is when P2 you add. So when the stock comes out of this previous high and we have a tick above the previous high, that's when you add to your existing two entries. So now you take a third entry and you trail a stop loss to that swing low over there, right? But then unfortunately the stock kind of came back. Now if the stock had come back here, I'd have exited with my position, and probably I'd have had a very small loss, which is totally fine, because I'm here to catch big trends, and you will not win more than 40 to 50% of your overall trade. So if you take 10 trades, you'll probably win 4 to 5 trades, but you'll win massively in those 4 to 5 trades, right? Now this would be one trade where you might not lose much, but then here luckily the stock reversed, and then we again had a dip, and again the stock kind of headed higher. Now after you add your P2, if you want to add again, which I would avoid, so do not add more than 3 times in any stock that you have, because then you'll be building out massive positions, which is very risky. So at this point, in case you want to add more, then since you've already added here, wait for a close above that same level there, right? So once you have a close above that same level there, then you can add more. Now at this point, you can go really ultra, super aggressive here and trail your stop loss as close as that point, or even if you're a little conservative, keep your stop losses here, right? And then you add here, and then now you let the stock gain run, right? And then again the stock dips, it corrects more than 38.2%. It's more than 50% correction here from this swing to this swing, and now the stock has again corrected for 3 to 5 days, and now again the stock is heading higher, right? Now that's again an opportunity to pyramid, and then you trail your stop loss here or here, however you want. Now remember, the closer the stop loss is to the price, the chances are higher for the stop loss to hit. And then the stock goes up, and then it hits your stop loss here finally. So now you've entered at around 100 levels here, and you've exited 150 levels here. That's a 50% return in just a matter of from September to April. Now it's around 6 months. You made 50% good profit with a very good position size. If you, let's say, had a 25% position size, then probably you made 12.5% return. If you had a 50% position size, you made 25% return. But that's how you do trend following in markets. So now this stock alone would have ensured you had a minimum of 12.5% return in your overall portfolio. Now remember, we had 2 positions, so it's easily you can take your position to 25%, and you need just a couple of trades like this in a year, and remaining trades you'll probably lose 1% here and there. So even if you had 10 winning trades, so let's say you had 4 winning trades of, let's say, overall 10% return, so that's 40%. And if you had 10 losing trades, which is, let's say, or let's take 6 losing trades of 1%, so you'll still make a good 30% return, right? 34%. Now here, remember, with the strategy, I'm looking to make at least 20 to 30%. Sorry, maximum 20 to 30%. Now beyond that is luck, I would say. But if you're making 20 to 30% returns every year, compounding would work wonders in this one, right? So this requires a lot of patience, a lot of guts to hold on to this. But let's look at another example here, right? Now the stock came down all the way down, and then it went again high. This was a Corona crash, and then again it corrected, and we formed a nice tight base here. Now the key to building up big position sizes is trying to find very tight setups here. For example, here this is a tight setup here, this is a tight setup here, and probably this is also a tight setup here. Now when you have such tight setups, it's just go ahead with and take a 0.5% risk here, because even with the 0.5% risk, you would be able to take a good 20% position size, and then if the stock moves in your way, you're not losing, you'll probably make much bigger money, and you're not losing more than 0.5% of your capital. Right now in this case, again, we had a breakout here, so this could be a second trade in granules, and then you could add a first entry here, but here it did not retrace at 8.2%. Now sometimes it's okay to be aggressive and take positions there, but try to stick to your rules if you're a beginner, right? And then we had this first pyramiding opportunity. You trade a stop loss there, and the stock goes higher, and then again it dips. You trade a stop loss here, and again it goes higher, and then you could have closed the trade whenever you want to, right? But the whole concept of trend following is riding massive trends, right? You're trying to catch a good 30 to 50% of your of money. Sometimes, once in a year, you might even get big trends like catching 100%, 150% returns, especially in a bull market. Try to have a good portion size and try to ride massive trends. Try to combine technicals and fundamentals and see good companies and try to ride such trends, and they will make massive returns, right? So I'm sure you love this. There are a lot of other things that I want to do similar to this strategy, and also I'm planning to share more such trades in the future with you and help you learn as well. So if you did like this video, don't forget to subscribe to my channel. But I'll leave you here. Take care, stay safe, and trade safe. Until I see you in another video.